if you ask the question if one product had to stay and the other one had to go, and there's four
We
of us.
quite often get clients call up and they'll ask, where should I be investing my money? The question at that point is largely around, what are you saving for? When do you need access to it?
Buy a Lamborghini.
That was the concern. It was the Lamborghini, Horace.
Yes.
And
Yeah.
It would be a caravan for me, not a Lamborghini. George. Hello and welcome to the True Potential Do More With Your Money podcast. My name's Greg Lang. Today I'm joined by Aidan O'Kane, Rebecca Wright and George Bell. Today we're going to talk to you about pensions versus ISAs. It's not a big fight, it's just a discussion around two products which we host on the True Potential platform. Today's episode 80, without sounding like Jamie Sexton, one of our other hosts on the podcast, I can believe it's episode 80 because it was episode 79 last week. So we'll get started. I think we've got some great topics to cover today. We've been asked a couple of questions as well in advance just about the products, and it's a very, very common query that we get. There's many products you can invest in financial services. Two of the main ones are pensions and ISAs, which is an acronym for individual savings accounts. So for the rest of the session, we'll just refer to an ISA, which is normally a faux pas using an acronym in a podcast or a meeting or a discussion at True Potential. But as ever, George, we'll kick off with yourself, please, just for a quick round robin on the market and a bit of an update from you, please.
Yeah, absolutely. It's been an interesting week, an interesting couple of weeks, really, when we join up all of the morning market discussions which we've been having. There's been a couple of key themes, so I'll maybe just concentrate on those. But in terms of equity markets, in the UK, you've had the FTSE 100, which is up around 40 basis points so far this week. The S&P 500 up around 70 basis points. Europe about 0.6. China's down around 1.3%, so we'll come on to that in a few minutes as to what's going on there. Bond markets, you've seen quite a wide dispersion in terms of where bond yields have been. They came from around 0.58% for a 10-year government bond in the UK at the beginning of the week, and it's been down to 0.48. Now it's around 0.52 at this point in time. So you've seen yields move up a little bit over the last few days, and in the US, a 10-year government bond, the yield there has gone from around 1.22 to 1.14 and then moved all the way back up there to around 1.22 again. In terms of currency, you've seen the dollar a little bit stronger against currencies such as the euro, but overall a bit of sterling strength coming through. So if we look at sterling against the dollar at this point in time, it's up around 0.4% over the week, around 139 is the FX rate there. Sterling against the euro around 118. But just in terms of some key discussion points, and I was trying to distill this as I was driving in this morning, but you've had some really strong earnings data coming out of Europe and the US especially. You're around 80% of the way through the reporting season for the S&P 500. So that's the biggest companies in the US, biggest 500 companies by way of their actual value. Around 80% through the season, 85% of those companies are actually beating the analysts' forecasts. If you look at the earnings growth quarter on quarter, it's near 100%. So you're seeing significant earnings growth coming through on that quarterly basis. And you're still seeing strong forward guidance, which is the important aspect when you see earnings reports around new orders, around their sort of projections for growth and development. But you are still seeing cost pressures. We talk quite a bit about challenges around supply chains, input costs, and that is still a factor which they're taking into consideration. Also, the need to offer higher wages is starting to bear through in certain sectors of the market, because you've had government support packages such as the CARES Act in the US, which is a similar sort of setup to furlough in the UK. It's been a challenge getting people in lower paid service sectors of the economy back into work. A lot of that will roll off next month, so you should start to see some of those pressures ease. But in terms of other forward-looking data, you also see the PMI data, and I talk about PMIs, and there's an acronym, so I'll explain what the acronym's all about. Purchasing Managers Index is what PMI stands for, and you've got a couple of different providers who demonstrate this information. You get a monthly reading of this, hence it tends to come up quite frequently. What they're doing with PMI data is they're interviewing and surveying purchasing managers, so supply chain managers within the manufacturing sectors, but also in the service sectors of an economy. And they're looking at their new orders, they're looking at their level of investment which they're taking, the number of people which they're looking to take on. And if you get a reading above 50, it's generally a good sign. It's demonstrating expansion. What we're seeing across China, the US, the Eurozone, the UK, is numbers above 50 across the manufacturing and the service side. So you're seeing really strong growth levels. What you do here is, well, how's that number changing month on month? You may see a bit of a moderation because we're coming from really high levels, but you're still seeing really strong forward expectations there from a growth perspective. I think the other area just to touch on is what's going on in China, and I mentioned, the index performance right at the beginning there. There was a bit of pressure last week, and some of that has washed into the beginning of this week, but you are starting to see a little bit of an ease in there. The reason for that is you had a government crackdown on the private education sector. So essentially what the Chinese officials were doing is announcing that any education companies which were covering a set curriculum would be banned from making profit from raising capital or listing on capital markets, which is quite an extreme measure. I think what it is a reminder of the potential intervention of Chinese officials within the marketplace itself. It's a communist country. Essentially, they can do what they like. The reason for this is it's really to challenge a situation which China have got of an aging population. In terms of demographics, they need to make adjustments there in order to make it more affordable for people to have children, to increase the incentive for childbirth. Essentially, you had 12 million newborns in China in 2020, which is the lowest which you've had in decades. So they're looking to address the education sector. The concern has been, well, where are Chinese officials going to go now? Are they going to go to the gaming sector? Well, that was raised at the beginning of the week, but that came out that wasn't actually a regulatory statement. It was just something which was published in a China Daily sort of news article. But you are seeing concerns as to how this is going to impact. Chinese officials have been quite clear in their communications with especially US companies this week that this is a focus around the private education sector, and that's where it will stay. So developments from here might be more measured, might be more controlled. But the question is, why now? And why is it coming in so aggressively? And I don't think it's the first sign which we've seen. We've seen the regulator pull back on the IPO of Ant Financial back in November last year, which was part of the Alibaba group, a fintech group. But it's also part of the agenda of bringing a lot of this sort of technology on shore, helping to make it more affordable for having newborns, but also they wanted to get it out of the way before you have the Chinese Communist Party next year. So they wanted to get this done and then move on into the second and the first half of next year with as little disruption as possible. So I think that just demonstrates the need to have an active approach when investing in areas such as China. But essentially that's what's happening there. Yesterday we also had the meeting of the Bank of England. They essentially left rates unchanged. In terms of where they go with rates and policy, they reiterated that they don't intend to really tighten policy until it's evident that we're soaking up a lot of the spare capacity which is present here in the UK. What was great though is their growth expectations, which were still very strong. GDP is expected to grow around 7.5% this year, and then revised the 2022 expectations by 0.25%, so around 6% there. In terms of inflation, we at this point in time are seeing inflation prints for around 2.5%. They expect that to peak out at around 4% at the end of this year, and then start to taper down towards that longer term goal of 2% there. So quite a lot of information coming out there this week. I just wanted to touch on some of the key areas, but generally some really strong data, which is worth just keeping in mind when thinking about the broader market concept.
Yeah.
Absolutely, George, and thanks again. It's always interesting listening to it live. I like the morning markets because you get a kind of quick synopsis of what's going on, but it's always good getting it firsthand, isn't it? So I always like to think of the True Potential portfolio as being the engine of the vehicle, but the vehicle itself, the actual car, would be the product that you're invested in. I think, to put money into the True Potential portfolios, you would access that through a wrapper, a product. And two that we're going to talk about today is pension and ISA. So I think in no order, Rebecca, just a quick one. What is an ISA? I've just landed from Mars and I'd like you to tell me just enough about that product to understand it.
So you can get two different types of ISAs. You can get a cash ISA or a stocks and shares ISA. We offer stocks and shares. You can invest up to £20,000 per tax year into your ISA. It's a little bit more flexible than some other products in that you can access your money quite shortly after it was put in, so maybe it's used more for short-term investments. And there's no tax penalties to any gains that you would receive within your ISA either.
Good. And Aidan, I'll look at you for a pension.
Yeah, that's great. All right, Greg. So a pension is a product that is essentially an investment vehicle for your retirement. So you can put money in from the age of 18. However, you can't get that money out until at least the earliest age 55. Now, that might feel like a tough period to have that money locked in, but the benefits on the other side of that is when you put money into your pension, any income tax that you paid in that period will be put into your pension as tax relief. So in a given year, you can put up to 32,000 into your pension, but you'll actually receive £8,000 of tax relief on top of that as well. So as a long-term investment, getting that additional tax relief in there certainly helps with the growth and the gains that you can potentially get come your retirement time.
Yes. And if we just talk about, let's say you want to take the money out, Rebecca, what's going to happen at the end of taking money out of your ISA? It's going to be...
Yeah, so you can take that out either as a lump sum or you can take it out as monthly income. The idea is that you've saved up for long enough to reach whatever goal you've had in mind.
Yeah.
And then it's quite straightforward. You can call up, access your money nice and quickly, rather than, as Aidan said, for a pension, waiting until you're a little bit older.
Yes. And I think one of the big differences, it's tax-free, isn't it? It's sheltered from paying any tax on the way in and also on the way out, which is quite important, where any gains you get within that product, you're not going to pay tax at the end. Aidan, on a pension?
Yeah, is it good? Thanks for coming back to that, Greg. On a pension, when you do get the age of 55, as I mentioned, you do get access to your full pension, but actually within there's a 25% tax-free amount. So what you'll often see certain times is when people get to 55, they'll take an element of that tax-free cash from their pension just to sort of maybe kickstart their retirement or to go towards something they've been saving up to, for that period of time.
Yeah, and I think it's kind of an assumption, isn't it, that everyone reaches the age of 55 and they take all of that 25% and they buy a caravan, they buy a Lamborghini.
That was the concern. It was the Lamborghini, Horace.
Yes. It would be a caravan for me, not a Lamborghini. But no, I think it's probably worth us just discussing that a bit further. It's almost a myth, isn't it, that everybody gets that age, and there's other ways in which you can access your pension through an income, and by keeping more invested in the market and still getting what you need from it. I think we were all around at that time when pension freedoms came in, and there was a bit of a hang on to your hats, is all this money going to leave, and it kind of didn't. It was...
Well, you expect people, people are sensible for the whole of their life, and then there was this assumption that because now this rule's coming in, they're going to get a 55 and they're suddenly going to lose their cool and take all their money out was just well off, to be honest.
Well, that's it. I mean, pensions are things people work hard to contribute
yes.
to, and if you understand the mechanism of your pension, what you're actually trying to achieve, then you understand that this has got to last you. So I remember the headlines about Ferrari dealerships are going to be queues out the door, but people are sensible. People know that this money's got to last them in their retirement, and they've got an idea of what that retirement's going to look like. You might have a Ferrari in there, but you've got to have other considerations to.
Yeah, and I think, Rebecca, that leads nicely on obviously what your team at True Potential does, which is helping clients understand the position they're in, understanding how we can get them to their goal, and when they reach it, what's the best thing to do. Do you want to just again quickly cover your team's kind of servicing?
Absolutely. So we quite often get clients call up and they'll ask, where should I be investing my money? The question at that point is largely around, what are you saving for? Mm-hmm. When do you need access to it? Is it your retirement, or is it something that you maybe need prior to that date? Once we've established a product, we can go ahead and support clients with investing via their client sites. Looking further ahead to once they've reached that goal and they're ready to start withdrawing from their product, it's then a discussion around whether or not do they need to take all of it, or do they maybe only need a portion of it, or do they need to stagger it over the course of a year or many years. If a client's a little bit unsure on that, we've got advisors in-house. They can always help them out and make sure that the income is actually lasting for the length of time that a client's going to need it as well. So that access is always there for people who are a little bit unsure. It is actually a common question as well, is do I have to take all of my 25% tax free in one go? I think a lot of people assume that it's just one chunk and you get it as it is. So we often have that discussion with clients around actually, no, you can just take what you need for now, and then it's always there to come back to.
It's interesting you used the word goal there straight away. I think that's a key aspect in the way in which we all think, which is different to, a lot of pension holders. They if they can't see what they've got in their pension, or they don't have a target, how they're going to hit it, and that sort of brings in the two aspects of pensions and ISAs, and you may think of your pension as your longer term target, but you've got to be able to see that and know where you are relative to that goal. Or you can have shorter term goals which you need a bit more flexibility. You need it before 55, and you can use products in there such as ISAs to support that. But
with the pension as well, and another thing to mention, we talked about the 25% tax-free cash, but it's a much more sophisticated product than that. There's drawdowns to that as well. So the way you build your retirement income, say, you can build it so that you're taking from your 25% tax, or some of that every year, and some from your taxable amount, but keeping it below the taxable limit. So actually, you're mitigating any unnecessary taxes that may be occurring due to this drawdown facility that's available through the pension itself. So I think that's an important thing to note as well.
Yeah, so it already sounds like there's quite a big difference between the two products, isn't there? There's kind of, many things to consider, and it's probably why it's always important to either speak with your advisor or speak with a member of the team to really work out what's best for you in the situation you're in. So, Rebecca, you mentioned there's two types of ISAs. There's a stocks and shares ISA and a cash ISA, and I think we've talked about that battle before as well in the past, which is, money sitting in the bank. George has kindly gave us a head start on inflation as well, which is obviously, we've talked about inflation and cash in the bank versus stocks and shares, and there's a big difference. And I think I personally, when I speak to a lot of family members, to friends, they'll all say, "Oh, don't worry, I've got an ISA," and I'll always ask them, what type of ISA have you got? It's with the bank, and straight away you're thinking you've not really got an ISA, have you? You've just got some money over there, which is attracting probably sub inflation rate.
Oh, absolutely.
And it's about obviously talking to them about the differences in the two, and encouraging them to at least consider stocks and shares. But I mean, do any of you three hold a cash ISA?
I don't hold a cash ISA, no.
No. I think an important aspect, people think of the title stocks and shares ISA. You can hold a multi-asset portfolio within that, so it's not just stocks and shares. Our portfolios, it's not just stocks and shares, it's bonds, we're holding alternatives, we're holding precious metals even, we hold currencies in different regards. So, stocks and shares, that's the word which people start to think, the stock market's not for me.
Yes.
But we're talking about a multi-asset portfolio here.
It's a very archaic term to be using really nowadays for what essentially underneath the vehicle is very sophisticated tools.
Especially if you're a defensive investor.
And I think a lot of people assume that, because it's a stocks and shares ISA, it's them who are doing the trading on the stocks and the shares, when actually, they can be invested in a multi-managed portfolio by ourselves, and we do all that work for them. Yeah. I think from the other side of things, for the benefits of a stocks and shares ISA, for certainly the age range on this table today, we're speaking to people who, our friends and family who might not have been invested in the markets before. Trying to tell them to go into a pension where it's going to be locked in might be a more difficult conversation than saying, just start investing in an ISA, just put a little bit in, see how it works. And I think that's one of the real benefits and drivers to get money into an ISA.
Yeah, and these sort of discussions are things which we have on our YouTube channel. We put out a lot of short videos in terms of, the product. What is the product, and get into the weeds of what are the benefits of each. So if anybody wants to catch up at the end of the session as well, you've got those quick videos.
Absolutely. And workplace pensions, I think that's another offshoot of a pension product, and again I could ask you all the same question, but I know you're all invested in it because True Potential have our own workplace pension scheme, and that's obviously a newer product into the market through the sort of the auto enrolment route, where there was some actually good changes made, in my opinion. Probably didn't go far enough in making it mandatory, because and I think we've heard other people on podcasts and such mention this, but it's my job to look after my retirement. I don't think I'm going to get looked after by the state. I genuinely don't believe that. I think for me to want to retire at any age, I've got to act. And I think the auto enrolment went some way in doing that, but personally I'd have made it mandatory for any employee of any company, and also I'd have probably made the entry level contributions higher, because most people, and I'm kind of talking wide, broad brush here, but most people can't afford to save into their pension. They either don't or can't, and that's through technology or just through a pure lack of understanding that they don't or can't. But I think, Aidan, you obviously speak with a lot of advisors about this, and it's a product probably that missed them out.
Yeah, I think auto enrolment was certainly, when it came about, it was more of an accountancy product more than anything. It was firms speaking to their accountants, we need to set up this scheme and put that in place, and ultimately it missed advisors out on that issue there. But going back to the how auto enrolment should be potentially souped up or better, I often speak to people, just as we've done today, and as they might say, I've got a cash ISA, you'll just as much here say, oh, I've got a pension, it's with work, and we've got to say, well, you need to take that extra step, you need to have a personal pension, and certainly those clients who are with True Potential as an auto enrolment solution, we're giving them the technology, we're giving them the tools to get engaged with these things. But from what I know, from colleagues and friends elsewhere, that's not the case. They don't know what's in there. So saying you have a pension, but you don't know what's in there until you get to age 55, isn't much good, really, is it?
Yeah, you're completely right, Aidan. When I speak to friends and we say, where is your pension, which provider is it with, and it's just with work. People actually don't know how much they've got in, but they actually don't know where it's invested either, which is quite worrying sometimes. But I think what is great about workplace pensions and auto enrolment is that it got a lot of people saving for the very first time. So we know from speaking to some of our auto enrolment clients that this is the first investment product that they've had, and it's quite a nice way to open the door to maybe putting a bit more into a personal pension, or opening up that ISA for the first time if they're saving up for other things as well. So it's actually quite a nice way just to open that door and segue them into future saving habits, and the technology does a really great job of that as well, and encouraging good saving habits and showing them exactly what they've got, so they do know who their provider is.
I think technology, we've always called it a leveler, haven't we, because you can give it to everybody. You don't have to have an amount in your pension before you can access our technology, or an amount in your ISA. You could be contributing 1 or 2 or 3% of your earnings, or even you could be just putting £50 a month as a direct debit, and immediately you can access the technology, and you get kind of all of the same access, all the same information from George and the investment team, from Impulse Save to the like. So that was a lovely segue there, because the next question I was going to ask is, how do you invest into your ISAs and pensions? So I think, George, how do you go around your savings? Do you direct debit? Do you Impulse Save? Do you do everything? What's your plan?
I do. I'm quite active. I'm probably one of the annoying people on the platform, because I play about with it a lot, because it's ultimately the product which I'm supporting the running of the portfolios, and I want to make sure that the information which is coming through is an accurate reflection. So I'm quite active on the platform. So I've got a pension, I've got an ISA as well. My ISA, which I've got. I operate in a different portfolio to my pension, just so I've got that transparency coming through, and I can play about with it a bit more. I have direct debits. I also Impulse Save. I'm quite regular on Impulse Save, and quite a lot of it is demonstrations when I'm in office. I put £1 in and so on to show people. But I also do, when I've got sort of savings at the end of the month, I put it in the market because I'm getting very little thanks for having it sitting in cash in the bank
Yes.
at this point in time.
Absolutely. Rebecca, do you do anything different?
Quite similar actually. So I have a pension and an ISA. I favour Impulse Save for my ISA. Pension, it all goes via the workplace, although I have increased my contributions a little bit, so I favoured that over setting up a separate direct debit. But like George, at sort of end of the month, if you've got a bit extra in savings, you can Impulse Save it straight into either one.
Yeah, I think what's neat about the auto enrolment is you don't even notice it, do you? Because you get paid, and I mean, you look at your payslip. You must be human if you don't look at your payslip. But the one thing you never notice is just that pension contribution, because it's just there, isn't it? It's not, it's not a hindrance, because it's kind of done for you. There's no effort in paying into it, and then you just work out how to live off the rest. And I think that's, going back to what I said earlier, why I'd have just made it mandatory, is it's just part of, being an employee of a company, is we need you to take ownership of your own pension. But
Part of building good habits, isn't it?
Yeah. Absolutely, George.
I got a discussion I had with a friend who is self-employed, and he was saying, well, I set up a direct debit for my pension. I don't really know what's coming in and out month on month, because being self-employed fluctuates. And I showed him the Impulse Save technology. I said, when you've had a good month, this is what you do. Just put it straight across like this. And again, it's creating these positive habits where, in a different scenario, if they didn't have those capabilities, then where do they go? That's the question, really, isn't it?
Mm-hmm. No, it is, and I think there's always that not misconception, but there's always that discussion around, if you're young, put it into an ISA, if you're older, put it in a pension. And for me, in a way, there's no age to either product, really. And I think we've touched on it slightly, but it's probably more around the goal, isn't it? Which, if we just probably dig into that a little bit more, what is a goal according to True Potential Aid, and how does a goal work? If I'm a client, I'm an auto enrolment client with True Potential. I'm in the True Potential scheme. I'm maybe looking to set up an ISA as a new product on the side. How would I do that? What would it look like? How would that work?
So you obviously go into your client site with True Potential, and straight away at the top of the page it's got buy new investment. So that's what you would go down to, and then it's obviously going to give you the options of the products that we have available. And if it's an ISA that we're looking at, and it's a short-term goal we're looking at now, what we're saying by short-term, we're probably saying 10 years is probably a decent short-term, and that might be something that is coming up in the near future, that you want to make sure that you've got the money in place for that event. Now, the typical one that we always use is, a daughter's wedding or something like that. You want to save up a certain amount of income for your daughter's wedding or your child to go to university. These are key short-term goals that you'll have, that you've got to pay for in time to come. So certainly that's how I would see an ISA goal. But it doesn't have to be that way, obviously. It could just be your ISA is going to supplement your retirement income. And when it comes to retirement income and retirement goals, what you've got to think about there, really, and I know I'm stepping onto the pension side of things here, so don't mind if I do, but what you're really looking at there is, what amount of money do I want to live off for the rest of my life come at retirement, when I'm no longer working? Okay, that's your goal at that point. So you really need to find out what that lump sum would be at whatever age retirement will be, and work back from that, really.
Yeah, and I think that's important, isn't it? Because a goal isn't necessarily an amount of money. It doesn't always have to be 400, 500,000. It could be, I just want to live off this amount of money, or whatever it may be. So it's a good point. And Rebecca, if I'm a client at the moment, I'm looking to increase contributions, what ways could I do that? So if I'm a current client with one of these products with True Potential, how could I go about, reviewing what I've got, and also then looking to increase the amounts?
So the easiest way to do it is through your client site. You can log into your site, click into whichever policy it is you're wanting to change your contributions on, and straight at the top of that page there's a button there to edit your monthly contributions. If you want to go through the goal setting features, you've got that option on there as well. So if you want to get some projections on what this increase to your contributions will actually do for your money come the time that you come to take it out, you've got the ability to do all of that as well. And you can of course speak to us over the phone also if you'd rather have a chat with somebody first.
Good. And we've talked about the big battle between pensions and ISAs. There's a third product, mainstream product available within the market, which we'll quickly spend a couple of minutes covering off, which is a general investment account. So, Aidan, probably, how would a general investment account be used to maybe complement the products we've talked about there?
Yeah, very good question, Greg. So, general investment account is a savings account wrapper. However, it doesn't have the tax benefits of an ISA or the tax relief additional benefits of a pension. It's purely there as an investment vehicle for yourself. Really, that would be the third option in any scenario where you're looking to, say, invest to your future self for your pension, invest to your near future self in your ISA. If both of those buckets have been filled, then you've got the general investment account to fall back on. Now, that general investment account will have capital gains involved if you do ever take the money out. However, what you can do is you can use that general investment account to fill all of your ISAs. So that's a good vehicle to make sure that you're not spending the money that you've still got that invested in a safe place, and you're moving it to a more tax efficient arrangement as and when you can.
Yeah, absolutely. And that's a common approach we see, isn't it?
Exactly,
Which is,
yes.
You know, you've almost fortunately got too much money this year to put into your products. You can use that as almost a substitute bench and bring it on each year into the... It's not like me to bring a sport analogy, but is it? But you can then bring that in each year as you go into a better tax treatment product. So we talked about goal setting, and I'll talk very quickly about probably 10 years ago, maybe 8 years ago, one of our colleagues, Daryl, who works on the True Potential Administration Department, I remember in my first couple of weeks going on the road doing presentations to clients and advisors, and Daryl's goal was to go to the Tokyo 2020 Olympics.
Yeah.
And that seemed like an eternity away, but here we are in 2021 watching the Olympics, and it just goes to show we've been banging this drum at True Potential for a good long time. A client site being right at the heart of it, and we've seen a big shift, haven't we, in usage of client sites, particularly moving away from these onto more. I've not got my phone, just because Graham normally makes you do a live impulse saver. I keep an eye on that, but we've seen a big change, Rebecca, from usage of the technology. Not necessarily away, we've seen an increase in overall logins and usage, but the percentage switch has actually turned a bit to mobile, hasn't it?
It has done, yeah. So we find that the majority of clients now prefer to log in on a mobile device. We do a lot of client-side demonstrations where we're showing people exactly how the technology works and which features are best for them. And we're finding more and more clients are asking to see that on the apps rather than the desktop versions. And what we find from clients is the feedback they give is that it's so easy when you're out and about. If you sort of standing queuing or you're on a bus or something like that, you can just quickly have a look at how your investments are doing. It's not as complicated as maybe having to get the laptop out and plug it in and everything else. It's just touch of a button, or scan your face in most people's cases, and you've got it there in front of you, which is really easy.
Did you find the last year, the pandemic, that put a big sort of shift in the usage of technology? I know when the pandemic was first coming about last year, I spoke to my grandparents and said, "Are you okay with everything shopping and so on?" They said, we've got all of our bank statements coming through online now. We're getting our shopping online. We're sorted. And I thought, well, you know, that's a marked shift in 6 months in terms of their ability to just jump on a laptop or jump on the phone and sort the finances, sort the shopping. So are you seeing, you know, more people using technology who perhaps you know, maybe preferred postal information in the past? Or?
Yeah, absolutely. We definitely get fewer postal requests over the last year or so. And the big one is video phone calls. So we've also always done a lot of video phone calls, meetings with clients, and engaged with people in that way. Even our live chat facility, you can see the individual that you're speaking to at the other end, which for a lot of people sort of a couple of years back was a big, oh my God, I can't believe we can see who we're chatting to. We thought it was a robot you were getting at the other end. Or might struggle with, say, the meeting link or something like that to get logged in. Whereas now you find clients say to us when we book an appointment, oh, will that be a video call? And it's just the norm now, isn't it? Everyone's done that many Zooms
the video
over the
chat.
last
The video
year.
chat's been great, hasn't it? Because
Yeah.
it kind of puts a face to the name as well when you're speaking to people. You know, telephone's great, text chat's great, but I feel like this is just that extra bit in the middle, which is it's quick, it's easy. You're right. There's no let me send you the details. You're up and running, and you just. It's almost like you're in the same room as them, which is great. But I always think as well the way things have changed is, imagine 2 years if I'd have said to you, George, let's just have a Zoom. You'd be, what the hell are you talking about? And now that seems to be its own word, doesn't it? Zoom. It's become a almost it's less of a product. It's more of just a thing you do. And I find that interesting. We speak with advisors and clients, and it is now always, let's just have a quick Zoom. And these are people we've spoke to for a long time about technology, and it's almost a blessing in disguise for us, because we've always been the pandemic, that is, because we've always been talking about use technology to streamline your business, to streamline your processes. And you know, I'll get told off for this bit of paper because we are that paperless at TP. But I think, Aidan, it's been a big culture change, hasn't it?
I think it has been a big culture change, Greg, but the benefits have far outweighed any sort of complications people have had with these things, you know. And we've actually seen that, you know, from clients with Rebecca to advisors that speak to ourselves. You know, the way they're engaging with their clients, the way people are working right now, there's efficiencies to be found in this process. Yes, there's nothing better than sitting in a room and talking to people like we are today. But to get points across quickly and still with a little bit of personality, a bit more personable, it's ideal for these sorts of things. And, you know, as you're rightly saying with grandparents and so forth, these were the people that there was an assumption would not be able to get into this technology. And now they're the ones who are flying with it and really driving that forward, and I think that's an important thing. And, you know, from the investment side of things, they're now seeing all of their investments on their phone, as you say, on their tablets. You know, most of my grandparents have iPads and stuff like that. You know, that's what they're working on.
Absolutely. Well, I think we'll wrap up not quickly, but we'll discuss quickly the pension versus ISA. That was the big fight at the start of the session, wasn't
Yes.
Which I've broken. I said I have both. So.
Yeah, I think some people maybe came on the podcast to watch like a fight, you know, like a rugby fight or something like that. Probably came on and watched something about pensions and ISAs instead by accident. But I mean, if you ask the question, if one product had to stay and the other one had to go, and there's four of us, so we might have to call it a draw. But George, if we only had one product, where would your money go?
I like the flexibility of an ISA. There is an aspect of, you know, I understand why you would lock somebody's money in until a certain point in time. There's benefits around, you know, inheritance, how much you can put in, the tax contributions, but I do like the concept of the ISA. I think you could probably raise the annual contribution allowance.
Well, that would be nice.
I think would be a really positive
would be
thing
a
to
good
do.
move.
Yeah.
Rebecca?
I think pension for me, I'm going to
One
disagree
more.
with you. I think the tax relief that you're getting back on it, the 25% that you get tax free at the end as well, and then the benefit that you can pass it on tax free makes it a really great product. So I'm going to disagree with you, George.
I mean, there's some fine points there, and obviously we didn't really get a chance to talk much about the inheritance tax side of things on today. From myself, I would pick ISA as the product to keep. And purely in my sense, it's the barrier of entry that some people feel towards a pension. They have that sort of intrepidness to put money in there. I feel like the ISA being a bit more open, a bit more flexible, well, a lot more flexible, it gets more people saving, and that's the important thing, in my opinion.
It's all on me,
It's
isn't
all
it?
on
The
you.
deciding vote. I was hoping that didn't happen, because I was just going to like...
That was our plan straight away.
I was just going to let it go 3-0, and then I could just say I agree with you. But I think if pensions had no limit on age, because I actually see that as a negative as opposed to a positive, because how can you use the term pension freedom and restrict the age you're allowed to access your own money. I find 55 is also a strange age in today's society, because I know 55-year-olds that beat me at the park run every Saturday morning. So I think there's kind of just it's kind of one of those, we've had this argument as well, but a defined benefit transfer or an occupational pension transfer. Why 30,000 as the cap? Where over you need to get advice. These are just numbers that have been plucked. And I think 55's one of those as well. I think if you just said to people, you're 40, you've made enough money, you want to retire, there's your pension. I would choose pension. But I'm going to side with the ISA team here. And I just think because you can put money in and when you want it, you can take money out. And that is investment freedom, which is what it should be about. It's your money. You shouldn't have anybody telling you when you can or can't access it. At the same time, I do think it is a good thing because it does stop people from just accessing their money just too early and then having nothing left to live on. But that's just me.
I thought that was going to end like the men's high jump in the Olympics, where both the competitors got gold medals. I thought we were going to give a gold medal to ISAs and a gold medal to pensions there, but unfortunately, are we saying pension got the silver?
We are saying pension took the silver today, ISA's got the gold, and unfortunately general investment accounts somewhere with a bronze at the bottom, but I don't even think they get to put it on. So I think we've talked about the Olympics, haven't we? We were talking about it before we came on air, and I think it's kept everyone entertained for, in some cases, the wrong reasons, because I seen a long jumper who split his trousers last night. That wasn't great for him, but there's been some entertaining moments. Rebecca, you were talking about a 13-year-old, was it, skateboarder?
13-year-old skateboarder, and I think it was a 12-year-old who actually took the gold.
12-year-old did take the gold in the skateboarding.
Yeah. It's crazy.
And Aidan, you're into skateboarding. You still get out on your board, don't you? Do you?
Yeah, apparently so, Greg. That's what happens. I think once you get over a certain age, you're no longer able to do the flips and the spins as much, you know. But I still try, yes. But I split my trousers. But I did enjoy the speed climb, and I thought that was a very good event.
Yeah.
And I enjoyed Tuesday where we won all the rowing gold medals. That was good. Unfortunately, for the watchers on the podcast, Darryl did not make the Olympics this year because of the pandemic, and they're not taking any.
There's no fans, which is a shame.
It is a shame.
It's a strange event, the Olympics, isn't it? It's kind of great, but also almost comical, I think, sometimes watching it, because the disparity between, say, the winner and the loser, because of the way that it works, it's fair, but also you've got, I don't know if you've seen the hurdler who was giving it to the camera and he was kind of, showing off a bit, and he just ran straight into the first hurdle and fell over.
I saw something online the other day and it said, can you imagine if the Olympics, rather than having the trained athletes, it was just a random selection of people across the UK and you just throw them into these events.
Like jury service, you basically just get a letter in, right, you're doing the javelin. Yeah, that would be good. I think the sad thing about there being no fans there is, these aren't professional athletes where they're getting paid large amounts of money. Sometimes these are people, and this is kind of like their life hobby. They're dedicated to these pursuits, and this is their one chance to get in front of people and really show their worth. So I do feel that's a shame, but I think the coverage of it has been fantastic, to be honest.
It's probably with the exception of the golfers, who I think they were saying the top 5 golfers between them earn more in a year than the rest of the Olympians, excluding the footballers, would earn in their lifetime. So it shows again the
disparity there.
Yeah, because obviously everyone knows golfers are overpaid for hitting a ball with a stick, but you can finish 100th and still get a canny paycheck because of sponsors. So, and have you all been watching it daily or just kind of as you've been going the Olympics?
I haven't caught every day, but most days it's sort of quite nice to have on. I've enjoyed it this year.
Yeah, I've been watching the highlights on an evening and stuff like that.
It's on every day in my house, but I see it as I walk in the room and then
yes, I know why it's on in our house as well, unfortunately. And I think the man behind the camera, Graham, said he watches it to fall asleep. So there you go. It's working for him, but as a bit of therapy to fall asleep. And what's everyone's weekend plans apart from watching some funny Olympic sport?
George?
George, you look like you've got some strange plans.
I've probably got the quietest weekend coming up. I've had quite a busy few weekends over the last few weeks, so I'm just gonna have a nice relaxing one. Boring.
Tonight's going out for a nice meal, and then I'm up bright and early for my vaccination.
Oh,
tomorrow
lovely.
There
morning.
you go.
Good.
Okay. I've got a family meal this evening. My sister and my brother-in-law are up, so that's going to be nice. And then I'm also going to try and keep it fairly quiet. I'm just going to take the dog out for a couple of nice walks, and that should do me. And also a run, because I'm training for the Great North Run, but not very well.
Yeah, I was going to say that's my weekend, is doing the park run and getting beat by that 55-year-old again tomorrow. But I've got a personal best I'm going to try and chase down tomorrow. The weather doesn't look too bad for the
No, it
park run.
doesn't look
So.
Are you enjoying the running?
No,
No.
I'm still going, but I'm trying. 500 mile in, so
500
just
mile.
another 500 to go in. Just a couple of months, but we'll get there. We'll get there. Well, thank you, Aidan, Rebecca, George. Thanks for joining us. As ever, everybody, thank you for attending today's podcast. We hope you enjoyed the David versus Goliath, pensions versus ISA battle. ISAs came out on top. And again, as ever, please do subscribe if you enjoyed today's podcast. You've made it this far, so I hope you have. And also do remember to like. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.